Hello, today is April 18th, 2015. I'm Jeffrey Tennant. As usual, let's review my last calls. These are numbers I was waiting for all week long. The preferred time frame ended early Thursday. These numbers finally printed early Friday, one day late, and they were good support resistance levels when they did print. One of the features of the mejt system is that when targets don't print in their preferred time frame, the market never forgets them and they print later. Sometimes this chart can be hard to read. Today everything is so bunched up it's particularly hard to read, so I tried adding a white rectangle. See if it helps. Early in the day it said ultimately higher prices would print, which they did, as shown by this line here. And later on in the day it said ultimately both higher and lower prices would print. When the drop came, the system said the move was a false move and would not stick. Well, this is giving me a hard time. It doesn't like me. So we got the ultimate buy signal satisfied, resistance over it. The ultimate sell was obviously satisfied. We still have to take care of this false move down and some more signals based on the ultimate and a optional signal. The numbers I've written down here because they're just too hard to read. They're all bunched up. They're 2084.79, 2084.31, and 2084.26. It isn't really that much higher than where we closed, but for reasons I'll discuss, as long as this low holds, I think we could go significantly higher than these numbers. We'll start out by saying we had a big drop early in the day and a series of lower lows. By the end of the day, we couldn't hold on to any of those lows. This blue line is the close, and in particular, we couldn't hold on to the low of the initial drop. This massive selling typically represents selling by retail customers, and they were selling en masse, and by the end of the day, anyone who shorted at this low is sitting with a small loss. To me, the timing of this late rally is rather significant. It's much too early, in my opinion, to represent covering of short positions. It can only be buying by people who think they'll make a profit if they buy. I think it's unlikely retail customers with the illiquidity of the weekend coming up are the ones who are bidding prices up. I think the only ones interested in going long in a negative environment like this one are the professionals who know that the amateurs have used up all their ammunition. This is my diamond on stilts pattern I pointed out Thursday evening. Here's the left stilt, here's a diamond. I felt the most likely scenario was that the pattern would go to completion, even though it doesn't have to. And here is the right stilt. Typically, there is a support resistance level at the origin of the left stilt in the mid-2090s, and even though we don't have to revisit that area as resistance, we usually do. I think it's interesting to see that the low of the day is a Fibonacci target of the diamond, and that's a logical place for the drop to end. There's also some other evidence that this low might hold. This is a 15-minute chart. Let's go to the 30-minute chart. You take the next to the last low, the next to the last high, draw a Fibonacci grid. This is a 61.80% retracement, and you hit it on the nose. We'll go to the 30-minute chart. I don't use Elliott wave, but it's interesting to notice that we have a possible ABC Everything fits. We've got 5 waves down. Waves A and E are practically equal, and wave purple C is exactly half of wave purple A if the count is correct. So again, we have some evidence for a low on Friday. If you look at the DeMark indicators, this is a 130-minute chart. Bar 13 of a buy signal can come early. And if that happened here, we could have a good rally. There are a few things to notice about this chart. One is that bar 8 of countdown is higher than bar 5. That leads to an increased risk of failure of the pattern, but that doesn't mean it fails every time. One of my rules, which isn't in DeMark's books, is that the lower the number of the lowest bar of the pattern, the greater the subsequent subsequent rally. So here, these are pretty low numbers for the last bar of the countdown. And we even have bar 8 of setup being lower than that. So that could lead to a good rally if this low holds. Notice also we have a reversal bar, in my opinion, at the lower Bollinger Band at the time when that is flat. Typically, that leads to a challenge of the upper band. If you go to a daily chart, we have a consolidation here, an overlapping consolidation here. This is not a stable pattern. It's a sign of the end of the rally. But typically what happens is you get one more spike up to a new high, and then a very sharp drop as the bull ends. So Monday's open is going to be interesting. If I'm correct about this being purchases by professional traders, they should get their money back and a lot more very quickly. We should rally pretty much from the open, often with a gap higher. We have targets in the 2084 plus area for mejt. We have a target in the middle 2090s from the origin of the left stilt. We have targets at the upper Bollinger Band, which is now about 2117 and change. That's the wrong chart. Upper Bollinger Band, which is around 2015 and change. So, as long as we can hold on to this bottom here, we are in for a good rally, in my opinion. Of course, if we take out the low quickly, the whole analysis falls apart. And that is today's call.